Well, let's get you a roundup of all the business news of the day. And markets ended the day in green after 2 days of a fall. The indices snapped 2 days of fall and advanced marginally on a weekly basis, while realty, metals and PSU banks advanced. IT and oil and gas sectors were under pressure. Alex Matthew with the wrap of all the market action.
Well, this is a positive end to the trading week for India, and the benchmark indices ended with gains of about 0.25%. We traded in a bit of a narrow range today, and that's been the case for the last couple of sessions. That held true today as well. The real action taking place in the broader end of the market, with the mid-cap index gaining about 0.5% and the small-cap index also gaining by about that much. Now, some of the positive sentiment from the global market rubbing off here in India as well, because that key overhang of the debt ceiling issue in the US was resolved very early today, with the Senate having passed the deal that was struck by the White House and the Republicans. Now, for the week as a whole though, there's not too much to speak of in terms of the move for the benchmark index. It ended more or less flat with gains of about 0.1%. But it's the second week in a row that you're seeing the benchmark index gaining. Here too, most of the action taking place at the broader end of the spectrum, with the mid-cap index gaining about 1.6% for the week and the small-cap index ending with gains of about 3.1%. Now, the key gainers for in the stocks that you want to watch out for are names that have been in focus the last couple of days. Apollo Hospitals, for example, gaining as much as 7.6%, and then the likes of Hero MotoCorp as well as Mahindra & Mahindra gaining about 5% or thereabouts. Titan and Asian Paints also registering strong gains. Among the losers, again, these are stocks we've been speaking about quite often. ONGC losing ground very early in the week and being a little under the weather all through the week. It lost about 5.6% after a disappointment of a Q4 result. You had Coal India that is down about 4.5%. This is on the back of its offer for sale, which will likely sail through as things stand right now. Adani Enterprises also losing 4%. Reliance Industries, a big boy, proving to be a bit of a drag for the benchmark, losing about 2.1% for the week. Now, among the sectors, you had the metal counters that did particularly well in a few sessions, but all told for the week they gained only about 0.33%. The real gainers were the Nifty Realty Index that ended about 4% higher. Pharma also for the week up as much as 2.4%. The Nifty Bank in fact lost ground, and so did the Nifty IT Index. India VIX is cooled off even further today, ending at 11.12, and that is going to be a little bit of a dampener for the bulls. Of course, the key levels to watch out for the Nifty 50 have to be that level of 18,500. We've defended that mark today. We've closed above that mark, but that's clearly something to watch out for at the start of trade next week.
The Indian rupee strengthened against the US dollar. The local currency appreciated by 11 paise to close at 82.30 against the greenback. And what is fueling the rally? Jaspreet Kalra joins us with the details.
Right, thanks for that. So yes, the rupee did put on a show of strength on Friday to end the week. Now the rupee strengthened by a total of 11 paise against the US dollar on Friday and ended the day trading at rupees 82.41 against $1 US. Now, a combination of factors has led to the strength that has been shown by the rupee here. These factors include a sustained inflow from international sources into Indian equities, a weaker US dollar, strong economic growth reported in India, and also expectations that the US central bank won't raise rates further at its next policy meeting. Now, while some market participants are expecting the rupee to strengthen even further in the near term, the rupee's performance will depend on how buoyant equity market inflows stay in the near term, and also the direction the US Federal Reserve takes when it comes to pursuing its 2% inflation target.
BQ Prime's Jaspreet Kalra spoke to Jamal Meklai about what is fueling the rally in rupee and how RBI has been successful in containing volatility of the Indian rupee.
Every single day of May and a few days before, we have had steady inflows into the equity market.
Yeah.
Right? We've never seen it for that long before, not for a long, long time.
Yeah.
So there's two forces there. One is also that, see, over the last 6 months, RBI has been hugely active in the market.
Yeah.
There are, they've last 12 months, they sold some 230 billion and we bought about 180 billion. So they've been on both sides, right? So they've been very successful in actually trapping the rupee, if you will,
Right, yeah.
between 81 and 83. So what has happened is the volatility has come down quite sharply.
Bank of Baroda's chief economist Madan Sabnavis believes that India deserves a better sovereign credit rating. Speaking to BQ Prime, Sabnavis said India's economy has improved a lot in the last few years. He added that there should be different parameters while evaluating developed and emerging economies.
I think it is accepted that India is definitely one of the best performing economies in terms of economic growth. In terms of inflation, I think inflation has generally been kept at a very low level in the last 5-6 years. Even when we're talking of 6% inflation number, I think it's a very reasonable one for a developing economy, given the fact that there is a lot of inflation which is caused on the food side. So inflation, to my mind, is something which has definitely been controlled. We are no longer talking of inflation in the region of, say, 9, 10, 11%, which was the case maybe around 10, 15 years back. So the fundamentals of the economy are strong. Now, next what we need to look at are the external sector indicators. And here we have seen that the Indian economy, in terms of the balance of payments, has been strengthening over time. So when I say strengthening over time, the best indicator is that what is happening to our forex reserves at the end of the day. Because whatever happens in terms of the external account, in terms of inflows and outflows, the net result is in terms of accretion of foreign exchange reserves. These reserves have been increasing, and today we're talking of something, they have actually crossed the 600 billion mark. So let's say we're talking of something like around $600 billion today. Are they adequate in order to cover our imports? Yes, today it's in the state of around 8 to 9 months. And this has been the case, I think, for the last couple of years, where the forex reserves provided a lot of cover for the imports. So this being the case, I think there was always a strong case for saying that Indian economy is definitely much different from what it was when historically a rating of BBB minus was accorded, and there was a reason for one to upgrade India.
The US Senate has passed the legislation to suspend debt ceiling till 2025, and the Senate passed the bill by 63 votes in favor, 36 votes against. Now, this ends weeks of uncertainty, with several rating agencies warning of potential ratings action if debt ceiling is not raised. BQ Prime's deputy editor Alex Matthew now joins us with all the details.
Well, it's kind of like gravity. What goes up must come down. There was a sense of inevitability when it came to the debt ceiling issue in the US. Almost everybody knew that a deal had to be struck because the thought of a default by the US is almost unconscionable. It could have caused a global financial crisis. And so the latest update, of course, is that the Senate has passed the debt ceiling deal that was struck between the White House and the Republicans. It went through with a vote of 63 to 36, with the moderates having pushed it through. With that, the debt ceiling is suspended till 2025, and the US can now borrow to repay debt as well as for future expenses. And those expenses, by the way, are being curtailed as per that deal. Non-defense spend is kept flat next year, that is 2024, and it will rise only by about 1% in 2025. Defense spending would increase to $886 billion, which amounts to a rise of 3% on this year. The legislation will result in a saving of $1.5 trillion over the course of the next decade, and that's according to the Independent Congressional Budget Office. Some economists have pointed out that the timing of this is not really fortunate for the US economy, which has been slowing, and there are concerns that it will slip into recession, and that spending push from the US government could have in fact supported the economy. In that context, of course, now attention shifts to the jobs data that is going to be very keenly watched, as well as the inflation print, and of course the next meeting of the US Federal Reserve that takes place on the 13th and the 14th of this month.
And the country's largest car maker, Maruti Suzuki's sales surged in May. BQ Prime's Sajit Manghat spoke to Maruti Suzuki's Shashank Srivastav, who said that the company reported its highest ever sales in a financial year, and this despite chip shortage continuing to impact the production activity. Listen in.
Suzuki actually did a little better And purely on passenger vehicles, we were like 16% up over last year. So we gained market share, almost 1% market share, and crossed the 43% market share mark in the month of May. So reasonably good set of numbers for May. Retails though are slightly less compared with the wholesale. Industry retails estimated to be 325,000 against wholesale of 334,000. So the stock levels now going up to about 61,000 in the industry. One of the big things which have which we as a part of our strategy to get back to the market share of our targeted market share of 50% is to try to increase our market share in the SUV space. In the non-SUV space, Maruti Suzuki's market share is 65%. But in the SUV space, the market share was only about 12.5% last year. But this year we have launched many new models, and if you look at only at the month of May, the market share has in the SUV segment gone up to about 21%. And by the end of the year, we are projecting that we should be about 24-25% of the market in SUV, and also the number one manufacturer of SUVs in the country. That's one of the big challenges we are facing. Last year we lost almost 170,000 vehicles production because of the semiconductor situation. Q3 we lost about 46,000 vehicles, and Q4 about 38,000. In the month of April and May also we have lost large number of vehicles. It is projected in Q1 for this current financial year. We will lose substantial production in some of our models. Those models are XL6, the Brezza, the Vitara, the Fronx, and also the Ertiga. But what we are trying to do is to increase our sale of the other models where we do not have this big problem, and those are largely in the smaller engine segment. But we are trying to do that. And hopefully in the next quarter onwards, we will see a much better situation with regard to the semiconductor component supply.
Let's move on to Lemon Tree Hotels now. The company's reported a 111% jump in their revenue for financial year 23. We spoke to the president, Vikramjit Singh, on the quarter gone by and their plans ahead, and he expects a major rate hike in October this year. Adds that the company's inbound travel is back to pre-COVID levels.
Let me tell you, ever since we got listed, it's definitely been higher. But let me take you back to 2005, 6 and 7. And trust me, the average rates back then were upwards of 7,000 rupees.
Okay.
And I don't see any reason why those days are not going to come back again.
Well, that's
so I see another major rate hike coming in October this year, and then a real big one next year as well.
Okay, that's interesting. And when you say that, when you obviously you've anticipated that, are you thinking in terms of, do you have a sense of how much it could go up by?
See, I don't want to make a forward-looking statement, but let me tell you the variables that are going on in the market. See, first and foremost, supply is shrunk. The addition of supply, if you read any hospitality report, supply is going to grow at sub 5%. Demand, as you know, is growing at upwards of 9.5-10%. So no new supply coming. Then let me tell you some variables. So segments like inbound travel, the foreigners who come and visit India, they are not even at 50% of their pre-COVID levels. And we are already, as a hotel company and as an industry, in fact, we are way above our pre-COVID performance. So imagine come October when the foreign arrivals start, a segment which has not really shot in so far, you can see the difference. So additional demand, G20 is bringing in incremental demand, the economy is doing well, and no supply.
Aram PropTech acquired Ratan Tata-backed Nestaway for 90 crores. The home solutions firm was sold with a 90% cut in its pre-COVID valuation of 1,800 crore rupees in 2019. Rishabh Bhatnagar gets us more details. And Rishabh, that's a steep decline in the valuation. What does it mean for the company and its investors?
And yes, rental home startup Nestaway has bitten the dust. It was valued at over 1,800 crore rupees in 2019, and today Aram PropTech has acquired it for just 90 crore rupees. That's a steep valuation decline of 95%. During the course of the pandemic, Nestaway's business crumbled, and due to the lockdowns, people left their rented homes to return to their hometowns as remote work became the norm. Pre-pandemic, Nestaway had about 50,000 properties on its platform and an annualized revenue of about 100 crore rupees. Currently, however, that number has fallen to 18,000 properties and an annualized revenue of only 30 crore rupees. Nestaway's distress sale also means that it won't be able to return a majority of the massive 900 crore rupees that it had raised from marquee investors such as Tiger Global and the UCRNT Fund, which is a joint venture between Ratan Tata's fund and the University of California. It also had names such as Flipkart, Goldman Sachs and Yuri Milner on its investor table. So yes, the funding winter has claimed another victim.